you are a retail investor, not a trader, then one thing you might have observed is that the bulls are actually going around in circles. What that means is if you leave your portfolio untouched, the stocks in that portfolio will go up, but they'll come down. Eventually, at the end of month, 2 months, they probably would have done nothing. In fact, if you are invested in mutual funds, then you might have got better returns than direct stocks, even if the mutual funds own the same stocks. Within this kind of chaos and bloodshed, there is one video actually which energized me a lot. I'll leave a link in the description. Do watch it. It's just that you will probably crave for more money after watching this video. Today's nugget, I will talk about why Reliance stock is stuck, and recently I booked losses and large ones. Market specific action today actually I got confused that my software is stuck because the stocks were looking literally similar. HUL, Tata Consumer at the bottom, Wipro at the top. Infosys was the leader today, taking Nifty up, which makes me believe that FIIs would be buying today. Next was SBI, HCL Tech, ICICI and Wipro. Four of these five stocks are in the green zone. And this is really comical. L&T hit a lifetime high, yet it was in the bottom 5 and in the red. Next 50 also was similar, just that the greens were a bit higher than yesterday. At the top today, we have Cholamandalam, Jindal Steel, LTI Mindtree, Macrotech and Pidilite. And at the bottom, the entire Adani pack, Power, Total, Energy, Green, along with LIC, which has reported very low premium collections in November. Now this graph is enough to tell you that the market breadth is not good. Three of the large sector were with the bears. Software and banking taking markets up, and insurance was pulling the markets down, the biggest red tower. Most sectors are making money for investors in the last 2 weeks. The ones which are not doing so are automobile, oil and gas, food and tobacco, and consumption. Today, only 14 out of 36 sectors were in the green, and investment banking continues to make most money. Look at the beautiful trend. All greens with no break since last 7-8 days. The problem is the market cap, no large tower. Those are here and here. Look at Nifty. Jumped on both sides of the opening price but closed where it started. 0% gains for the day. Two of the indices, Next 50 and IT, hit new highs. HCL and L&T, they hit new highs. Reliance continues to be in the red zone. That is because the distance to 52-week low is just 6%. Bank Nifty lot better than yesterday. Axis Bank was in red. Rest everything looking better. Private sector banks were looking okay. The smaller banks were actually doing better. From the bottom till the middle, the distance to 52-week high is still phenomenal. Public sector banks, however, were not that good. Here also, distance to 52-week high is pretty high. One major difference in public sector and private sector banks is there are no reds here. See private banks? Full of reds. Investing as a sector looked fantastic, but the glory was with three companies only, Nippon, 361 and Nuvama Wealth. And two of the stocks, BSC, CDSL, they hit a new high every day in the morning, but then they go down. CLIC down in the very first 5-10 minutes and stayed down. Most of the insurance pack, and I've talked about it in the past also, if the GST rates are not cut favorably for them, this sector will bleed and bleed a lot. NBFCs are looking increasingly better these days. Most of them are up on a daily basis. Volumes are also slowly picking up. In fact, the microfinance pack, which is also NBFC, that was up a lot today. See Satin Credit up 6%. Look at how much some of these companies have to traverse for their 52-week highs. Volumes are rocketing now. IT green as usual. Select stocks were red. Volumes were high. People want IT at any cost. 7 all-time highs. In telecom, ITI continues to rock, another 6% up. And Nelco actually was up a lot more. It hit a new high and then came down a bit. In the defense pack, Zen Technologies created a new high and closed 3.3% up. Oil India and IOC were up in the oil pack, HPCL as well 1.3%, 0.5% down for the day, and we have still 5 red companies. Power also was bleeding, that's because the Adani pack was down. Siemens is the only green company. Vari continues to rock 5.5% up for the day. Vari Energy is rapidly approaching its high zone. Premier Energy hit another high, but then it went down. Sugar Pack was fantastic today. Literally all companies good. Triveni Sugar up 9%, Dalmia Sugar up 9%. Look at the volumes of Triveni, 7x of normal. Dalmia Sugar 5x of normal literally. Consumption was mixed bag. Nestle, Dabur, Britannia, and Tata Consumer still in the red. Varun Beverages, Radico, Associated Alcohol in the green. In the non-edible pack, Bajaj Consumer that was up 10%. The middle of this sector was green today. Pidilite, Page Industries, Gillette, Kalan Jewelers, they continue to be in the green. Three red stocks, Asian Paints, which hit a fresh low, followed by DMart and 3M. USD INR hit a new low. In fact, today we breached 85 as per this data. 85.2 was the lowest point. Three continuous red days for Nifty. Bank Nifty was up today. Nifty IT continues to go up. And next 50 after one red day is back to green. Auto continues to sulk. FIIs bought today also. In fact, today is a rare day when both FIIs and DIIs, they did the same stuff. Both of them bought. Now, Amazon has joined the 15-minute delivery race. This race is getting dirtier. Margins will get squeezed out. India is expecting a good growth in the aviation industry. The bad news, one at a time every day. Equity fund inflows fell 14%. This is the DIA per size. This is official data from AMFI. My trades. First, the sells. I booked profits in Hindustan Petroleum and Triveni. The profit in both cases was more than 10%. Varun Beverages was in slight profit only. I am not expecting the best quarter for Varun here. This is not the complete set which I have sold. Manpurna Finance about 5-6% gain. That is fine in about week's time. Satin Credit, I have a lot of inventory. I had bought 1000 stocks for averaging down at 148. Today the stock went beyond 165, so I sold 1000. Old stocks at higher price would have got sold, but again I would still call it a profit. I bought a little more of DCW. This is related to my expectation that China is dumping less or not dumping right now. And today I bought another ETF, Nippon India ETF. This is same as Nifty 50. I am already having Motilal Oswal's Nifty 50. I just wanted to contrast if both of them are exactly same or one of them is better. Reliance, what's up? In this video, I am specifically going to talk about my experience, my decision making process. So Jio Financial Services is a separate listed company now. This is not a subsidiary of Reliance. Reliance Industry itself is broken down into multiple businesses. Reliance Retail is the bigger one. Mr. Ambani's daughter Isha Ambani runs this particular business. The erstwhile petrochemical business is still under this particular brand and logo, Reliance Industries Limited. This is run by Mr. Ambani's youngest son. Jio Telecom is run by Akash Ambani, who is the elder son. These two siblings are the twins. Reliance Digital is the digital arm, of course. There are a few more companies like Reliance Media, Hotstar, etc. These are the broad businesses. Now, if you look at the results of Reliance sales, last few quarters, 7-8 quarters, essentially the sales have been same. Something like 2,35,000 crore approximately. EPS also 10.8, 13, 11 and so on, 12 range bound. Neither sales are increasing, expenses are in control, OPM is similar, EPS is similar. Petrochemicals I'll talk about first, exploration and production of crude. This is the business where Reliance was there most along with refinery. My understanding is E&P, they have slowed down, they are not getting too much into say KG Basin or a new exploration. They are buying crude, refining it and reselling it, the refined products, the petrochemicals. 80% of that is exported, 20% goes within the country. This business has been hit a lot, specifically because of low prices, which reduces the GRMs. And on top of that, there was a windfall tax, which made our exports less competitive in the international markets. Reliance refineries in Jamnagar, they are world's largest and one of the most efficient refineries in the world. The best margins are produced by Reliance, and Indian companies including Reliance have bought a lot of Russian crude, which reduces the cost further and improves the margin. Just that windfall tax was taking it away. This is gone now. Hopefully Reliance will be one of the biggest beneficiaries of windfall tax in the times to come, provided crude does not go down further or goes up. Reliance Retail, this is not the only brand list. Let me bring up the list. This is the complete list. In fact, there could be more also. These are the Reliance owned brands, including their synergies with international businesses. These are exclusive partnerships, the international ones mostly. Almost seems like half the world, if not more, is a part of the Reliance family now. These are the Reliance Digital Services logos, petroleum retail, polyesters, textiles, polymers. Most purchasing power has been with IT and IT enabled services and the feeder industry. This industry, in my opinion, is a bit jittery. Many people don't agree, that's okay. This industry has the highest purchasing power, especially for high end brands. So, if they are a bit jittery, the first thing they do is reduce their consumption. That impacts all sorts of retails heavily. Essentials and low cost, that will be still fine. As a result, most of the high-end businesses in the Reliance brand of Reliance Retail, they will probably face the heat just like most retail is facing right now. Telecom, we have all seen what happened in case of Jio. A lot of customers stopped using Jio. The prices were increased and somehow people were not happy the way prices were increased. It was as if they didn't have any choices. Many of them moved to BSNL and competitors, and Airtel has improved their connectivity significantly. The USP was cost, that is gone now. They have reduced it or changed it. As a result, telecom is under pressure. Their fiber optic also has faced quality challenges. Most people who tried to use their services, they gave up after few months and they switched to something else. Digital and media, this is all hazy. In media, there is Network 18, then there is the Geo television part. Then they have acquired a lot of businesses. Who is where? No one is clear. For example, Network 18 bought the rights of, say, Hotstar. If matches are coming here but they are being telecast on Geo Cinema, where is Geo Cinema? Is it a part of Network 18? No. Is it paying Network 18? Investors don't know whether they are getting paid for the new business or not. So there are several key issues that Reliance right now, as an investor, I'm saying, is facing. The pricing war. One is the ones which Reliance has waged. For example, right now they are waging a war on Pepsi and Coca-Cola by reducing the cola prices. Second is now say Amazon is getting into 10-15 minute delivery. So all those pricing wars across the country where Reliance is on one of the sides, that is squeezing the margin definitely. Also, we saw recently that the monopoly proposition, people didn't take it very kindly. Monopolies is a reality of capitalism, but you don't have to boast about it the way it was flaunted recently, especially the way pricing in telecom was handled. Accounting ambiguity, I just showed you the data on the financial side. They've acquired so many businesses. Are those businesses doing zero sales, zero profit? How come for last 3-4 years sales is same, profit is same? Recent blemishes I already mentioned. Instagram was full of memes. Believe me, people want them to see in the boardroom, not on Instagram. Some of the M&A execution, I'll not go in the detail. In the past, investors are a bit cautious, especially the way Reliance Retail was delisted. Also, the ownership structure. For example, Facebook has certain ownership. Their annual book is thick. The list of companies is around 2000, 3000. If I buy, for example, Reliance Industry, how much of those companies will be owned by me as a shareholder? In the end, you might see that this is a new business, say Reliance Retail, just for argument's sake. And since I own Reliance, I own Reliance Retail. But in the end, we might say that no, Reliance Retail, say this much was Reliance family, only this much was Reliance Industry shareholders. Also, succession plan, while it is clear that the three children of Mr. Ambani, they will inherit the entire thing. No one is doubting them. However, no one has seen them in action. The feeling still people get is that Mr. Ambani is still running the company. Everyone at this juncture wants to see the next leadership. For example, in Tata Group, it was very clear that if Mr. Tata goes, nothing will happen to the group. Each company has a professional CEO run by Tata Sons. Mr. N. Chandrasekharan leads the Tata Sons business, not Mr. Ratan Tata. Here, most people do not know more than 5 names in the entire Reliance family. So I'll probably get back in the group if I see it improving. I won't hold any of these reasons close to my heart and not buy the stock and not make money. Hope this was useful. Let me in the comment section if you disagree or if you think I missed any point. Thanks for watching. I will see you tomorrow.